Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss second quarter 2020 global retail trading trends is Bob Cortright, CEO of Drive Wealth. Bob, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Pleasure to be here.
Before we get into the data behind the second quarter retail trends report, tell us a bit about Drive Wealth.
Well, Drive Wealth really is just a brokerage infrastructure player, just similar to what the banking infrastructure players do for her partners. They build infrastructure for banking services. We build it for brokerage experiences. So people looking to offer their clients a savings or investment product, we help enable that in all different unique and custom ways for our partners.
And the data that you see from Drive Wealth indicates a surge in retail activity is evidence of a larger paradigm shift in investing. Why was there a surge in activity for the second quarter? And would you say that part of it is due to stimulus checks, people having the time to trade?
Well, I think the digital transformation has been going on for quite some time. In fact, the last decade, obviously the proliferation of smartphones and obviously affluence growing around the world. So I think people have been looking to invest in an easy and frictionless way for a long time. And that's been happening as people have built some really cool and very efficient, frictionless applications as we've seen all around the world. So the pandemic, I think, just accelerated that. And then you add all the different stimulus checks that were brought on. People are sitting around looking for things to do. Obviously, that made it much more easier for them to be focused on investing versus, say, buying or speculating in the sports market or something like that. So we've seen a tremendous increase, but there's more reasons than that. It wasn't just for the fact of the pandemic and people were getting stimulus checks. I mean, 0% interest rates and central banks have been printing money for a long time. People around the world are looking for yield and they're looking for growth. And there's nothing better than some of these great, as we saw what happened with the Nasdaq over the last couple of months. People are buying things that they know and understand and they actually consume. So it's been a really interesting time.
It certainly has been, and I think it's interesting to see how they were trading. Are there certain times of the day that they favor? Did you see more buys or sells?
No, it's interesting, right? Because that's what I'm saying. It's not just a U.S. Centric type phenomenon. It's global. So we saw a lot. It's because we're such a global player and we power so many people around the world. We saw a lot of orders, always line up over the nighttime, especially over the weekends. So a lot of orders, I'd say 40 to 50% of our orders lined up prior to the opening. And then they also trade during the day as they see the markets moving around. So a lot of it's not really speculative in a way that we're really a savings and investment brokerage house powering a lot of cool savings investment platforms. So people are taking their money that they have and they're placing it in the market. Fractional trading has made it very easy. Notional investments at Drive Wealth are over 90% of trades have a notional component to them. So as people are getting involved in the markets and diversifying their portfolio using dollar cost averaging, it makes a lot of sense for people that want to put money to work.
What are the four factors driving retail trading trends then?
Well, I think there's a number of factors that are driving it. One, it's obviously low yields around the world. And also the fact that these markets and these products, these custom companies are marketing very heavily to these companies, these citizens, no matter where they live, right? And people want to be involved in them. They're seeing the growth of the stock market. The U.S. stock market is the most premier market in the world. They offer great companies. So I think there's a lot of money that needs to be put to work. Central bank printing a lot of money, interest rates at zero again. Like I said before, they're looking for places to park their money and get it to work. Also, currencies have been somewhat stable, but obviously printing money has weakened a lot of currencies around the world in some of the developing countries. And they want to move some of that money offshore into other markets. So that's all powered the market here today in the U.S.
Well, you're absolutely right with the acceleration of the digitization of financial services. And of course, that was amplified with COVID-19. Do you think that is a trend that's here to stay, where we will see customers start to come online more regularly with digital financial services and certainly wallets with digital assets?
Well, yeah, I think your point about wallets is tremendous. We're seeing this global. This is a global trend. The digital wallet, obviously the transformation of banking to a wallet, that ecosystem's developing and going beyond just banking or payment services, getting heavily involved in savings and investment services. We think this trend is going to continue for quite some time. And we refer to it as embedded finance versus, trading. We don't think it's purely a brokerage trend here. We think it's an embedded finance trend where people are building ecosystems, applications. They're allowing people to do a lot of things inside their wallet or their ecosystem very efficiently. We think, machine learning, AI, I think, is going to all improve the experience inside a wallet, where people are going to be able to use their money much more efficiently and be helped that way, in a way really enhancing or developing more financial literacy for people. So we think this trend is going to continue for quite some time, actually.
Yeah, and it's interesting because my last question to wrap up here was, do you think the retail trader is here to stay? And as I'm listening to you answer the other questions, it's almost like you have to ask yourself, certainly the retail trader is here to stay, but the way that they conduct business and look at their finances sounds like that's certainly evolving.
Yeah, and I wouldn't even refer to them as retail traders, right? I think, one of the interesting things I'll give you in terms of what Drywell's recognizing, in the last couple of months, we've seen the older age groups actually participate more than younger in terms of getting involved in the markets, which is an interesting trend, right? People were basically, because of the pandemic, who were forced onto some of these financial applications because their bank branches were closed or whatever, right? They've been ordering things on Amazon and find that to be a very pleasant experience. And now they're doing their finances on those applications. So we see the age group maturing actually in terms of people getting involved. This trend, I think, is here to stay for a long time because of the fact it's very frictionless, it's easy to understand, it's in the palm of your hand, and I think the tools are going to become much more powerful as we go on. And it's not really trading. Again, remember, savings and investments. It's not really trading.
Yeah, I would agree with you. Thanks so much for joining us on Trade Talks.
Thanks, Jill. Pleasure.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.